Hello. Hello, and welcome to the show. It is June 25th, 2022 at the time I'm making this video. I'll be talking about MMAT and MMTLP. Those are stock symbols for metamaterials and metamaterials Torchlight preferred shares. Let me start by saying that I am not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. So on Friday, we had a WTF moment, I would say, because I was, so from my perspective, I happened to be looking at MMTLP stock, and I saw that it plummeted after the price had been going up for for about a week or so. I was saying, what's going on here? It suddenly just dropped like a brick. Well, I noticed a piece of news. I didn't even read the news first, but I noticed there was a time correlation of 2:03 just when some news came out, and at 1400 hours, it's 2 o'clock, that's when the price dropped significantly. So, turns out that the piece of news that caused it to drop was this: metamaterials to sell $50 million in securities to investors in direct offering. Shares plunge. And my first reaction was immediately, what? Metamaterials I can understand going down due to share dilution. I didn't even think how much it's being diluted by. I just said, okay, there's some share dilution here. And MMTLP is going down in Sympathy. Okay. We know that that there's no that any MMAT share dilution, it has no linkage to MMTLP, because MMTLP is based upon the sale of Torchlight Energy oil and gas assets, right? I mean, I even made a tweet about it. It's this is how I communicate for fast-moving events, and this was a fast-moving event. So I said, MMAT share price drops due to possible share dilution. MMTLP goes down in Sympathy. MMTLP is a dividend play in the sale of Torchlight Energy's oil and gas assets. MMTLP has no linkage to MMAT. MMTLP has 165 million shares, period, and it should not be affected by any MMAT share dilution. So this is my Twitter handle, Tony's Twits. If you want to see what I'm saying in real time for weird events, you can monitor that. You can check out that Twitter profile. A lot of people were confused about it, and they're saying someone needs to explain this. John Brda says, I've asked George to explain this to his shareholders, and I'm waiting on a response. It sounds like John can't explain what's going on either. He's probably, I don't know. It sounds as though he doesn't know, but maybe he does know, and he's not allowed to say. It's hard to say. And a lot of people said, thank you. I believe George has a good reason behind this. And John said, I agree with you. I'm sure it's part of a bigger picture, because, people aren't going to suddenly dilute their shares for no apparent reason. But in general, this came out of left field. So CPLANT basically, he issued a tweet that I think a lot of people were, that echoed the feelings of a lot of people in terms of metamaterials shareholders. He said, I certainly hope so. This move cost me a lottery win. Talking about MMTLP and also MMAT. I'm not effing happy, but I'm not leaving. I'm sure there's a reason. It better come out soon. Now, if this is for salaries or BS, then hell hath no fury. I'm about to go Carl Icahn about this, So he's obviously pissed, right? I mean, as a shareholder, I was pissed. It's like, what the? It's like Whiskey-Tango-Foxtrot. I mean, give me a break. What's going on here? This is the actual press release, okay? Links will be provided, of course, but I'll just go over and actually read it. Basically, today announced that it has entered into a securities purchase agreement with certain institutional investors for the purchase and sale in a registered direct offering of 37 million shares of the company, common stock at a price of $1.35 per share, and warrants to purchase 37 million shares at an exercise price of $1.75 per share. The gross proceeds to the company from the offering are expected to be approximately $50 million before deducting placement agent fees and other estimated offering expenses. The warrants will become exercisable 6 months after the issuance date and expire 5.5 years after the initial issuance date. Okay. The closing of the offering is expected to occur on or about June 28th, 2022, subject to satisfactory customary closing conditions. Okay. And if we read further on, we will see that, let's see what it is. The securities are being offered for sale by the company pursuant to blah, 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 including a base prospectus previously filed with and declared effective by the SEC on June 14th, 2021. Offering is made only by means of a prospective supplement, etc., etc. So on June 14th is when it was first, it was being worked on. So there are 37 million shares, $1.35. Multiply the two together, you get $50 million, basically. There's also 37 million warrants, and they have a strike price of $1.75. So if they were to be exercised, that's $64 million that would be going to MetaMaterials. They are only exercisable 6 months after the date, and they expire in 5.5 years after the date. The closing date is June 28th, but the offer date is June 14th. This is when it was being worked on, was June 14th. This is when the deal was basically being closed. This is when the deal was basically being negotiated with the buyers, who are certain institutional investors. We don't know who the buyers are. Okay, the placement is via Roth Capital Partners. The agents are AGP, Alliance Global Partners, and the financial advisors are Cormac Securities. Okay, so suppose MetaMaterials goes to $2 a share between 6 months and 5.5 years, which I think is very likely. That means those warrants become viable. When those warrants become viable, they get exercised, and at $1.75 times $37 million times 37 million warrants, that's $64.8 million. Okay. Combine that with $50 million that's already been, that will have been spent. That's about $114.8 million that could go to MetaMaterials after all the, that's before all of the expenses, right? In exchange for $114.8 million, we're getting about 74 million shares total. We know that there's about 280 million shares, so this becomes about 26.5% additional shares. Okay, 26.5% possible dilution that's coming about as a result. It's not too much dilution, to be honest. Okay. And also, the average dollars per share, $114.8 million, 74 million shares, is $1.55 per share. Okay. Basically, if all of this stuff comes to pass, they're talking about a total sale of 74 million shares at $1.55 per share. Okay, that's kind of understandable at this point now. Let's see. Let's go back to June 14th. June 14th, the stock, opened at $1.47, got as high as $1.52, but, it closed around $1.46, close to its low, right? There were about 2.2 million shares traded then, which is the average daily volume or so. If we look at Friday's volume, it was about 69 million shares. Okay, so there was a ton of volume there. So it's a lot more volume as a result of this one announcement. Okay, and if we look at the price and how the price was affected and what the volume looks like, that's a very interesting picture to me. When the price dropped down significantly, there was a volume, but not a lot of volume. Not a lot compared to when the end of the day happened. And at the end of the day, there was about 70 million shares of volume almost, right? Most of the volume is at the end of the day. That's quite significant. So the price drops down a lot, and then a lot of people wind up selling afterwards. Primarily, I think, because they weren't getting information as to why the price dropped down. Why are these shares coming into existence? It's it's not easy to understand. I don't understand it. I didn't understand it. But along the day on Friday, there was a post on Reddit. I think this is the most insightful post of the day on Reddit. It's the only post you need to read today. So an S3 was announced, a private offering. Two important parts of the deal, right? 37 million shares of the company at a purchase price of $1.35 per share. That's $50 million. Warrants to purchase 37 million shares at an exercise price of $1.75. Add the two together, you get 310 divided by 2, you get $1.55. That's the average price per share. That's a true cost per share of this private group paid, right? More than the $1.46 and $1.47 at the time of closing on June 14th. If we look back on June 14th, we see that it was $1.46 at that time, right? So so they're paying more than $1.46. Half the deal the $1.75 warrants are unsellable for 6 months, meaning there's little chance they would sell half the shares. There's little chance they would sell half the shares they have before then, as this would shoot themselves in the foot if they wanted to see the second half of the deal be exercisable by January 2023. And they have 5 years to exercise or they become worthless, okay? Meta, we know, just bought a bunch of companies, and no one batted an eye about it because it was good for Meta, right? But it cost Meta a lot. Doing a private offering is also good business sense at this time because we need the money from acquisitions. The offering needed to be done before any when divvy, spin-off, pump, squeeze, and they likely wanted to see some price stability to gauge on an offering, right? Not crazy gyrations from all kinds of news. It's a serious deal and not something an investor wants to gamble. Meta was not cash flush. Sorry, Gardner. And that's referring to a tweet by Wade Gardner, who basically implied that Meta was cash flush. But the answer is that they must have needed this $50 million for something. We don't know what they needed it for, but they probably needed it for something, okay? Does this hurt our third run in a month to $2? Yes. Is it a setback for investors who are exhausted? Yes. Might it have set us back on a potential squeeze? Potentially. Is it all bad? Definitely not. Okay. On June 28th of this, on the 28th of June, this private group won't be rushing to sell their shares under $1.35. And this is what I would call the most reasonable and insightful post in it, right? They're actually getting between $50 million to $114.8 million. I came up with similar numbers through a different set of calculations, but basically, the Meta is going to be getting a bunch of money, and that bunch of money is going to be for a reason. It's got to be spent on something that has value, okay? We don't know what that is. I saw this post along the way on Friday, and I thought that was really interesting. What if the $50 million raised was to buy MMTLP and lock up the oil co deals? Well, I mean, yeah, that would be cool. That would be great as far as I'm concerned, right? If they bought up the 50 million or if they bought up the Oilco shares the MMTLP shares with $50 million or even 114.8 and they get MMTLP shares, so they get the dividend from the oil and gas assets, it's understandable why they might want to do this, right? It's actually understandable. Meta would get a huge amount of money. It makes sense. Let's think about it, right? I mean, 165 million shares. And if they spent, $1.58, which is the price of MMTLP, across a whole $114.8 million, $114.8 million, that's 72.7 million shares about, right? 44%. Now, granted, if they started buying that up, MMTLP is going to start rising up in price dramatically because, no one's selling, of course. Same thing, even if they spent $50 million at $1.58, right? And if they could get it at that price, that's 19% of all the MMTLP shares, right? That's 31 million shares, 19%. If they did this, I'd be ecstatic. I think this is a great deal for them to do this. Are they doing this? I don't know. I don't think so. But if they have a deal that's similar to this, yeah, that would make sense, right? In the end, if you look at MMTLP, this is from a post on Reddit. The dividend is going to cause a short squeeze, right? And I believe this. I believe that what this post says is going to be true, right? I mean, MMAT, they're working on transferring their assets to MMTLP, which is going to be Oilco within the next month or two. You can get MMTLP right now. I mean, if you can acquire MMTLP right now, all right? and you can be eligible for the dividend. And the dividend could be anywhere from $10 to $60, maybe more even, right? And if you buy MMTLP today, you can get, it's basically $1.58 or $1.55 at the time of this posting, right? So you're talking about a potential 2,000+% return if it gets to $40, right? And on top of that, MMTLP can still squeeze, just like Overstock did, just like OSTK, which means it could go from anywhere from $3 to $100 after the dividend, right? If it gets anywhere from $3 to $100, if it squeezes because of that, that's huge, right? So there's huge potential here on MMTLP. On Saturday, June 25th, we see this post from George Palikaras. I saw this after I came home. And I think this is good. He says, what can I say at this stage? What can I say? At this stage is what we'll be using the cash to support our strategic growth plan and maximize Meta's leverage in everything we're working on right now, right? So there you have a plan for the cash. That's good. Next week, we'll communicate a lot more details as soon as the 8K is filed. So there's an 8K, which is how they plan to spend that cash. Looking forward to Q2 results. That's another interesting thing. I wonder what Q2 results will be, right? Q2 results could be interesting, but it looks like they have a plan. They're planning to spend the money for a purpose. That they raised the money just so they could spend it, right? So it was raised for a purpose to be spent, and they have a plan to spend it, right? And it's not for nothing, right? So at this point, we see a response from CPLANT, and that basically also echoes what I think the entire Meta community is feeling, right? After some reflection on this, right? Last night over a bottle of Grey Goose, I think it's better that we did an offering before the S1 run-up instead of in the middle of it like last June. This will make about $265 million raised in 12 months. Not bad for a little metal company. That's pretty good, right? So you think about it, you take a break, think about it, and there's probably a very good reason for this. Yeah. Now we saw this write-up on our MMAT on Reddit, and this is also another pretty good write-up. I just saw this today, about 6 hours ago. The offering is better than you might think. Okay, everyone got emotional on Friday, and we missed the good news. The purpose of this is to suspend the at-the-market and terminate the continuous offering. Okay, I see this as another door closed for shorts. They're not getting a public at-the-market offering. They now have to buy from Meta, institutions that Meta is in agreement with, or from the Meta fam. Is Meta selling? No, they're only selling to institutions. The institutions that Meta's in agreement with? No, they're not going to sell. They want the shares, of course. That's why they're buying them. The Meta fam? Meta fam's not selling. Okay. Maybe there were some people who sold on Friday because they panic sold, but the Meta fam knows what's going on. We're not selling Meta. Right now, the biggest market fear is interest rates rising and recession. No matter how great a company is, you can't get around these conditions tanking your stock unless you have no debt and a stockpile of cash. Now Meta has what it needs, okay? Personally, I'm thankful it was done at the $2 mark on no news when everyone was expecting shorts to hit it hard again anyway. So he thinks the shorts were going to hit it hard at $2. And I happen to roll my options into a more protective position when nearing that $2 mark, and I'm only down the 40% that the stock was instead of the 95% I would be if I didn't move to protect my investment. So good for user U Psycho and Author Hatter. Psycho and Auth Hatter. So good, good move. If the company was trying to gut you, they would have waited for the breakout like AMC and completely destroying momentum, which they didn't do. So good news. Good man. The AMC stuff was much worse. Okay. The cash burn Meta has, even if it's from acquisitions that better the company in the long run, look bad on the 10K. Yes, they look bad on the quarterly reports because they're spending money. But it is good for the company. Okay. Meta currently is trading at levels reflecting their assets. Having the extra 50 million on there with the added Opto.dot assets and likely steadily increasing the revenues put us in a much better spot for the Q2's 10K, likely raising the bottom price from that $135-ish level to a $150 to $175. Yeah, makes sense. I kind of agree with that, okay? What I'm saying is after the short-term reaction, they have likely protected you rather than sold you out. Yeah, that really makes much more sense right now, yeah. And they could be setting the stage for a bigger play where now the only shares available for shorts come from the Meta family of individuals, insiders, and trusted institutions. And those guys, including me, no one's going to be lending out their shares. The numbers and filings don't lie. Read and understand them before reacting. This is the only DD. Everyone posts and videos, and even my words here are all speculation outside of the filings. Yeah. Everyone makes videos. I'm making a video. Everyone does posts. And we're all speculating, right? He's got a link to what the SEC filings are. This is a door. I can only bring you to it. You have to walk through it. Good post. It actually agrees with everything I think right now. I'm thinking it could actually be a pretty darn good price tomorrow. On Monday. We'll see. This leads to a post I saw on Twitter by the Butcher of Wall Street, Marcel Kalinovic. I can't pronounce his name. I'm really bad with that. Meta was massively shorted today, and today was Friday at the time he posted. Institutional cost to borrow has increased to over 262%. Fee rate is up to 72.99 for retail. There are a measly 599 shares to borrow across 3 lenders. Okay. This price drop and dilution FUD is to shake out paper hands, and he's right. I really agree. So if we look at what Ortex data says cost to borrow max of 262%. Cost to borrow average is around 186%. I mean, there's the costs are outrageous. Okay. And then there's a final picture image on this post that says silverback gorilla is a lot stronger than the grizzly bear. They both have a very similar bite force, but in general, the overall strength of the silverback gorilla, it's gonna take out the grizzly bear. Okay. So there you go. Next, so I had a quick look at the price of MMAT. I was showing you all the charts about MMTLP price and some intraday pricing on that. This is the trading view price of MMAT combined with some volume on the bottom. It ended the day around $1.17 or so. In blue, we have the after hours market trading where not much happened. But as we can see, most of the volume happened in the last half hour, in the last, 15 minutes of trading, actually, even. We had huge volume spikes there. But that's not where the price action was, right? The price action was at the announcement, right? Right around 2 o'clock Eastern Standard Time was when the price action happened, right? So, so that's when we started seeing the massive price drop. Could this be a bargain in price? I don't know. It looks like it to me at this point. It looks pretty bargainish. If we look at the price of Meta, if we zoom out in price, right, it had a high of about $20 a little over a year ago or so. And now it's $1.17. Could it get anywhere back remotely to that price level? Yeah. Could it squeeze back up there? Yeah. I think the price action getting up towards that $20 price point was because of a squeeze, right? We know that Torchlight and Meta were merging, and as a result, shorts had to exit their positions. Some squeezing was happening, and it took the price at that time from somewhere around $4 a share up to $20 plus. So could another squeeze happen? Yeah. I'm not saying it couldn't. Who knows? Again, I am not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. These are my musings and my thoughts on metamaterials and metamaterials, Torchlight Preferred Shares, stock symbol MMAT and MMTLP. I bid you good night. Goodbye.